California is home to more billionaires than any other state in America. But a new proposal now aims to tax their wealth itself, not their income. And what's surprising isn't just the backlash from billionaires. It's that California's own governor is openly opposing it. This is not a political opinion video. This is about how California's tax system works, why state leaders are nervous, and what this proposal could mean for California's long-term finances, housing market, and economic stability. The proposal is called the 2026 Billionaire Tax Act. It would impose a one-time 5% tax on the total assets of billionaires, not just what they earn in a year. Supporters say this tax could help close massive healthcare funding gaps, offset federal healthcare cuts, and protect services for low-income residents, seniors, and people with disabilities. They argue that only a few hundred people would be affected, and that California's wealthiest residents should shoulder more responsibility during a fiscal crisis. But opponents argue the issue isn't how many people are taxed. The issue is how mobile those people are. Governor Gavin Newsom has been unusually direct about his concerns. He has called the proposal damaging, bad economics, and something that would ultimately be defeated. His concern is not ideological, it is structural. California already has the highest income tax rate in the country. It also relies heavily on a very small group of top earners to fund the state budget. In fact, roughly the top 1% of Californians generate about half of all state income tax revenue. That means even small changes at the top can have massive effects on the state's finances. Newsom's fear is simple. If even a small number of ultra-wealthy residents leave California, the revenue loss could be far greater than what this tax would collect. This concern is not theoretical. According to recent reporting, several high-profile billionaires have already started moving assets, purchasing property, or expanding operations outside of California. Some have targeted Florida, others have moved offices to Texas. California is not just deciding how to tax billionaires. It is deciding how it plans to fund itself in the years ahead. And that decision will shape housing, healthcare, and the cost of living long after this proposal is gone. Even the threat of relocation matters, because California's budget depends heavily on capital gains taxes, stock-based compensation, and wealth events that are highly concentrated among a small group of residents. When those residents shift their financial footprint elsewhere, state revenue becomes more volatile and less predictable. Supporters of the tax argue that billionaires should not be able to hold the state hostage by threatening to leave. They say California should prioritize affordability, healthcare, and public services over appeasing the ultra-wealthy. But opponents counter that this is exactly why state-level wealth taxes are dangerous. Unlike federal taxes, states compete with each other. At the federal level, there is nowhere to move within the country to avoid taxes. At the state level, California is competing against 49 other states with different tax structures, lower costs, and fewer regulatory burdens. Governor Newsom has even said he would be more open to a similar wealth tax at the federal level, where capital cannot simply shift from one state to another. The deeper issue here goes far beyond billionaires. If state revenue drops, infrastructure spending gets cut, housing programs lose funding, healthcare systems come under pressure, insurance costs rise, and the burden often shifts downward to middle-income and upper-middle-income residents. This is why the billionaire tax debate matters to people who will never be billionaires. Right now, the proposal is still gathering signatures. It faces opposition from business leaders. It faces resistance from the governor, and it may never reach voters. But the bigger story is not whether this specific tax passes. The bigger story is what this debate reveals about California's future. Its reliance on a narrow tax base, the fragility of state revenue, and the growing tension between affordability, public services, and capital mobility.